with the system they have in place. So Ed's comment is absolutely right, is that it's a way to, take what we're learning in the crypto world and possibly give us an alternative way to do our transactions more quickly. And I think that there are initiatives underway in the government looking at this.
Looking at that.
So, but I would, that's helpful, and I would also draw the distinction. I think the U.S. dollar has been turned into electronic currency, and that's distinct in my head from digital currency, which was totally created in cyberspace. And so really what's happening is you're taking a physical dollar, you're putting your bank savings account, they take the dollar, they create the electronic version of it, which then gets into your bank account, right? And what government runs into problems when they try to adopt what cryptocurrencies are doing is they're used to making fiat currency. So just like quantitative easing, let's just whip up $4 trillion. Whereas the concept behind a cryptocurrency is a limited amount that then prevents inflation. And so you're going to get countries like right now El Salvador is trying to digitize their currency, but they're basically trying to create fiat currency with cryptocurrency elements to it, and the two don't match up. And so I think that's going to run into some problems as they try to implement that.
Yeah, and I'll agree. I know that earlier today, the gentleman from Duke said, Milton Friedman was clearly on, money matters, and the supply of money should be regulated in a kind of linear form. And to your point, governments don't really like to have rules to follow. They want to be able to bend them as they go. No, I know that's a revolution. So let me I've got one policy statement here that I want to read, and I would like to get the panel's take on this. So this is Texas released guidance on money transmission, and Kansas has followed, Massachusetts is modified it slightly, I think North Dakota. But so in there, and I'm going to read this statement because, of course, the judge here, or the Treasury Department, Texas Department of Banking, said they were trying to determine whether cryptocurrencies should be considered money or monetary value under the Money Services Act. So I think the sentence down here, he goes, was very important. He says, but the owner of a unit of cryptocurrency has no right or guaranteed ability to convert that unit into sovereign currency. The only way a unit of cryptocurrency, the only way to convert a unit of cryptocurrency to sovereign currency is to find a willing buyer. Therefore, cryptocurrencies as currently implemented cannot be considered money or monetary value under the Money Services Act. So, let's start down from what do you think about that from if it's not money or monetary value?
I mean, I think it's putting regulation down and stifling what Bitcoin should be used for. The currency side of Bitcoin is meant to be used and to be transacted, to be used in daily life with vendors and with merchants. I think any regulation like that is just putting another.
Well, do you see that as, is this a good? They're basically saying it's not money or monetary value, or we're not going to regulate it as money or monetary value.
Well, I think it's creating more layers of regulation. There's something different there that it's going to be treated different there than it's going to be treated somewhere else. Is it better than the IRS regulation? Possibly.
Possibly.
The regulation is going to mean different things to different people. Mm-hmm. Just like how the tax rate is going to be different to different people, how they're using it. So, that a regulation like that may be important to somebody that's not important enough.
Right, in Texas. Now, South Carolina, Dave, I was going to say, I don't think the state does not have a money. They don't regulate it themselves. So what's your take legally on that for the states that do issue that, such as Kansas, Texas, some of these other states that are saying it's not money and it does not have monetary value?
Well, I think it's interesting that they come out and sort of just, gone that far one direction, because I think that may have a lot to do with their lack of real knowledge, and particularly when you see states that'll follow other states on legislation of all types. You'll see a lot of copycatting, and then what they don't realize, no matter what type of law you're talking about, is that the same laws and the same sort of reasons behind it don't, it doesn't mirror in each state. And I think this is a perfect example of it. You're just going to cause more confusion, and I think as we see things move forward with the regulation that'll come, You'll start to see, with Bitcoin flourishing, I think you'll start to see a lot of issues related on the tax side of things, when they're going to try to start both on state level as well as federal level, look at, the situation from a reporting standpoint, and people that are trying to evade businesses and things like that. And you'll see them really sort of aggressively get into that market to go after that money that they think they may be going around. So when you have things like this, Texas, or the Kansas or whatever other states that have that, it's going to be difficult. There's a case I mentioned earlier when I spoke in Florida right now where 2 gentlemen are charged related with money laundering. But, the perfect argument by the intelligent attorney is, well, that's not a currency under your law. So, I mean, you're going to see different sort of loopholes that are created by this, these regulations that come out.
Right, so did they just punt on this one? They said, we're not going to regulate it. It's not money, so we don't have to regulate it.
It can be. A lot of states like to fall, they complain about the federal government when it's convenient, and then at other times they like to fall back on it. So it could be a situation where, they're more hoping that the federal government will be more active. They've got other things that they're looking at. In that situation, again, the federal government, no matter what you're dealing with, if it's the business side of it or the taxes and whatnot, there's only so many cases or so many situations that they're going to get involved in. So at some point, the states are going to have to do more than, punt.
Right, and Andrew, I'm going to come to you. I just want to, there's the
I'm
second.
going to take a different take. I'm going to have a different take on that question, so.
Okay, good. I'm just going to add one more sentence in here. But he said, the exchange of cryptocurrency for sovereign currency between 2 parties is not money transmission. This is essentially a sale of goods between 2 parties. So that's all. That was a little bit further down, and so that's really what they're doing. Is they're saying this is not money transmission, but by their standards. So go ahead. Let's put your take.
So I like dealing with states that have that narrow definition of money. A lot of other states have very open-ended definitions of monetary value of money. And I know that when a state has a narrow definition of money, that my client's activity doesn't require them to get a license. And so in the states of those states, Texas and Kansas and I think Nevada in particular, has been outspoken about that. And it's important for wholesale sellers, like if you have a Coinbase type business model and you're a merchant and your only product is virtual currency and that's what you're selling, or if you're an ATM operator too and you're selling it in a vending machine type transaction too. I like it when states come out and at least clarify that, because clarity is something that we don't have a lot of. So it might be short-sighted, but it's clarity in the short term.
But don't you think it could cause problems down the line?
It does for the example that you mentioned earlier. Yes.
Right, because if you use that guidance, even if it's short-sighted, if you build a business model around it and then it changes, that's going to certainly bite you. Well, I got a couple of other questions. Yeah, go ahead.
Could I make a note about that? And is that that's out of the banking department, the advisory?
Yes, it's Department of Banking.
And it's dated, what's the date on it?
That is, what was the text? April 3rd, 2014.
Okay. The important thing, we've got 50 states, 50 different banking departments or securities departments, depending upon where this function lies. They are staffed very differently. Many of them are very understaffed. In the case of Texas, this particular opinion was written by a lawyer who has a tech background. He may be the only one in the whole state system like that, but he was able to get, and he's been looking at and getting himself educated on this. We don't have those kinds of resources in many of the rest of the states. So there's an educational issue at play here when you're dealing with strapped resources. And I just urge people that you need to understand, you need to work with these states, and you need to get them understanding what they're dealing with. New York obviously has had a lot of people to throw at the issues that they're dealing with. And do they get it perfect? Maybe, maybe not. But there's a steep learning curve, and that's what we're dealing with. Plus, as we learn more, we're going to see revisions made in these definitions and the way they look at it. And a lot of what is going into the early views is the fact that there's just not that much circulation of Bitcoin at this stage of the game, so that people don't feel that it's reached that critical mass as a currency.
Right, absolutely. Okay, and I know that, how are we on time back there?
20 minutes.
Oh, good, so we are plenty of time, okay. Well, I did want to say, based on the current rules and regulations, I have a couple of things that I can say small businesses that contact me via the foundation and ones, they have some questions, and we want to say, and I want to ask the panel here, from the regulatory perspective, for instance, if somebody stole my Bitcoins, and they took $10,000 of my Bitcoins, is that, I've heard some different cases, is stealing Bitcoins a crime? I'll let anybody in the panel.
You're probably best
I think
suited for that,
stealing
yeah.
anything is a crime.
There you go. Now, okay, so in this one particular situation, they said somebody hacked my computer and stole my Bitcoins. So if they take that digital property, how would that be prosecuted? It's not like they stole cash. Is it a felony if I steal $10,000 worth of Bitcoins?
Yeah, absolutely. I think, the issue you're going to run into there, and I get calls about this a lot, and I'm sure a lot of attorneys do, is instead of Bitcoin, think about somebody's identification, their social security number. Hey, this person calls me to my credit go down, that sort of thing. You're talking about just their information that's being stolen. That's clearly a crime. Whatever you would like to define Bitcoin as, if it's actually being stolen, there's going to be various things that they're violating as far as security and different things like that from where they are. But I don't think that just because Bitcoins are recognized in different ways in different states and then not recognized at all to some degree, doesn't mean that if it was actually hacked and taken, that it would be looked at any different for the value of what it was. No different if someone stole, an expensive horse that you had in your stable. I mean, it's going to be, you're going to equate the value to what it is maybe at that time. I think the problem's going to be, though, often is, who's going to be investigating that? How's that case going to be brought forward? And then you're talking about so many other issues that come into play, similar to identification, is people in other states, other countries, and things like that. So I think it would be hard to prosecute the ones that do come through simply because you just don't know who it is.
Right, from a defensive perspective. Okay, let's ask another one. That this seems to be very popular right now on eBay, and you guys have probably all heard this. With Bitcoin, if I buy a flash drive and it has Bitcoins on it, and again, eBay's doing a lot of this right now. So I guess I would say, is that money transmission? Is that a sale of goods? And maybe, Carol, you can say, what would you classify that as? If I buy a little flash drive for $1,000.
Are you buying the flash drive, or are you buying the Bitcoin on the flash drive?
I think it's being sold as I have a flash drive that's worth $1,000. And it might have Bitcoins on it.
Well, that's probably the eBay example may not be the best example to use, because eBay owns PayPal,
Right.
and to the extent that you may have money transmission involved, that transaction can occur over PayPal, which would be in a regulated setting.
Right. So, but in that particular case, because you are, like right now on eBay, if you go out there, you'll see lots of flash drives that they're selling that say they have Bitcoins on them. I guess under today's guidelines, maybe federally, is that money transmission?
It depends on the state.
So it's going to be not at the federal level.
And then the question will be, who's actually involved in the transaction? And it's a much more complicated issue, because if you're selling the drive, and if you're engaged in the business of selling drives that have Bitcoin on them, and the state recognizes the sale of Bitcoin in some way to be a transaction that involves the transfer of value, then it may be you, the person who's selling the drive, that's engaging in the money transmission, as opposed to eBay itself.
Right. So, and I'd say from an accounting perspective, if I just sold, not every day, I just wanted to sell a Bitcoin and I sell it for $500, I would then have to account for that.
Exactly. Yeah.
Would it be a sale of goods?
It's property,
It's property.
Like selling stock. I mean, you have lien to purchase it, you create a basis in that. If you sell it, there's a gain. You got to pick that up on your tax return. I mean, the IRS, the regulations they came out with, I mean, they're really not new. They just kind of reworded some stuff. Anytime you have an economic gain, they're going to have you recognize that. The answer is almost always going to be yes.
Right. They're going to always make you account for it.
May I add something, because David alluded to something earlier in the context of your question, just something for people to think about. If you've got a flash drive and you want to put it out there for sale, you do need to be concerned, especially if you look at that Florida case, as to whether you are involved in the transfer of value. Are you in fact a money service business? Are you subject to money transmission licensing laws? And do you know who's buying it on the other side? And what happened in the case that David was alluding to is that the DEA approached two gentlemen and said, we want to buy Bitcoin. I think they were trying to, they'd sold it through local Bitcoin.
Right.
And they approached them and represented that I think they were using the proceeds of illegal activity, so from a drug sale or whatever. And here, I just got this from an illegal activity that I did, and I want to buy your Bitcoin from you. So you need to be aware of those types of things if you're engaged in that activity on a personal level.
All right, very good. Well, I know we're getting on time, and I wanted to open it up for some questions from the audience. I have plenty more, but I'm sure you guys do. We'll start. Yes, sir.
You guys talk a lot about regulating consumers and users of Bitcoin, and you talk a lot about regulating miners. So when I try to explain Bitcoin to people, I try to describe the miners as a central bank. It's the verification, it's the
We're going to get a microphone.
Oh, okay. Oh, there we go. Thank you.
So with Bitcoin, as we all know, it's anonymous, and we like that. But the problem with having anonymous decentralized banks is we don't know who are doing those transactions and who's storing our data. And particularly when you have large mining pools, and anybody can have any amount of that hash rate. So the European Banking Authority, a report you didn't have up here, about a month ago came out with a very large opinion report that basically said the largest driver of risk is the anonymity of the miners. What do you think of this going forward? Do you think regulators will follow that path? And if they do require something like identification of miners, what's the impact of Bitcoin?
That's a good question. And I was going to say, anybody on the panel, or I guess...
I'll start
Okay.
on it, is that I think I'm not sure we've advanced too much beyond do you regulate miners who are, quote, mining for Bitcoin, because that's really how people started thinking about the mining function, is that the miners were out there and they were generating the Bitcoin, and then the question was if they're engaged in just selling it for themselves, or are they selling it as a business, whether they needed to be regulated or not. I don't think there's been a lot of review from a regulatory perspective into that verification process. The anonymity issue is definitely something that is being considered, but that's coming more from the law enforcement community, because that's where they run into the issues of concern for them, is how can they trace that criminal activity, and is the mining function obfuscating that criminal activity. But I really don't think we're very far along in the regulatory process in looking at the miner function overall.
I'll go out on a limb and make a prediction, and I think everybody would agree that mining will eventually sort of become more centralized, particularly with Bitcoin, right? I mean, it's hard to be a hobbyist and mine now. And as those centralized bodies get more powerful and are responsible for processing more transactions, I think you will lose anonymity simply because they are tasked with a pretty important responsibility, right? You have billions of dollars of transactions going through that pool every day. Whether it's a company, I assume that at some point it will be, that it will be a very large enterprise that is running those centralized pools, for profit, of course. So. Well,
Andy's comment's interesting as you move towards more concentrated mining and more centralization. What's going to happen is you're going to move more towards the central administrative model. If you remember when FinCEN came out, they had decentralized on one side and centralized, and so it's going to move whatever cryptos into a more centralized function. So it is going to put the miners in a position where they may be subject to money transmitting licenses, subject to money service business regulation, and have to take on a higher standard or responsibility with respect to regulation.
So Carol, would you say that but miners are the only ones that in essence issue currency? And I think that, so if they are the, I guess to your point about anonymity, that if they are the only, I mean, that's, it has to come from mining, but I guess the question is, that mining could be anywhere in the world, so it's, I guess, difficult. If you mine here, you might be regulated, but what happens if you mine in South America, you know? But they are the issuers of new Bitcoins.
Well, I think to that, if they, you know, if they did come with something that was in the United States, if you, just like any other foreign company, they could look at it, if you're gonna transact business here, meaning if the miner's gonna do exchange and sell them, whether they're made in Europe, you know, then they would require them to be under the same standards. But I think, and I don't know if you disagree with this, Carol, or not, but, you know, what's gonna be the argument if, in fact, you've seen all the uproar from, you know, with the New York proposal and everything else, and there's a lot of it for good reason, but from a miner standpoint, with the, you know, anonymity, that they're, you know, they're anonymous, what argument would they have really if the government was to begin, you know, asking for that, requiring that different licensing like that they needed to remain that way? I think from consumer protection side of it, you know, they're gonna say, look, if you're gonna be in that field and play that game, then you're gonna have to, you know, have some sort of, you know, responsibility that they can show.
You've raised a number of important issues in your comments. I think it's always a facts and circumstances case. So as you go from 1,000 miners down to 3 miners or to 1 miner, to your point on the issuance, if you're still issuing through the mining process, or still generating the currency through the mining process, then you do have a question as to, is that entity or group of entities becoming the issuers? When you're talking about the verification process, then you've got questions like, to what extent are they, if you look at from a criminal analysis, one of the issues is, are you facilitating criminal activity? So by performing the mining function to allow those transactions to happen, and you're down to 1 or 2 or 3, does that mean that you're helping facilitate that criminal action, and should you be looking more closely at that activity?
Right.
But it will come down at the end of the day to a facts and circumstances analysis. How many players are at the table, what level of activity, what level of involvement do they have?
Next question.
Next question?
Okay, so right here.
There we go.
Hey, Don.
Hey.
So, it seems like new regulatory opinions are coming out fairly frequently, and we should expect many more over time. So my question is, what should the community be doing? Are there any best practices? We are definitely living in disruptive times. What should we expect?
There you go. What should we expect? Okay, Ed, let's start with you.
Ask regulators what
What to expect? More regulation. But no, legitimately, I guess I'd say so. Right, it's changing fast. What would be your recommendation for the people in the community?
Yeah, so I think there's a multi-pronged approach, and I'm not saying that it's going to be easy, because given the decentralized nature of the Bitcoin ecosystem. So number one, it needs to be education. If you want better regulations, the people who write them need to be more knowledgeable, and that is a long process. You need to educate the members of Congress that are on the key committees that will write the laws. You need to educate their staffs, because the staffs most likely will survive longer than most of their members, and they go from committee to committee. You need to educate the state regulators, the legislators, as well as the regulatory agencies in much the same way. This is a multi-year process to get that down, and you're looking at a very fast-paced moving industry. That's number one. Number two is that to the degree that you can, the community can do this, the more you self-regulate and the more you provide transparency, the more positive model you give to the regulators to follow, so that when they do put out the regulations, they're going to make a lot more sense. So for me, in the gold industry, one way that you determine a mutually agreeable price for gold is through the London Fix. And the London Fix basically came about because the three biggest banks that had most of the gold trade would sit down and negotiate with each other until they came up with the price. That is the market coming up with a solution that today regulators normally come up with. And the London Fix then stayed in place for almost 100 years before now the marketplace is forcing a different solution. So I'd say at least two big general things is educate the people who are going to be writing the regulations and provide some type of self-regulatory model to give guidance to people.
Carol?
Organization is very important. I think many of you heard Perry Ann earlier, is a group or identified groups coming together who can speak with a certain amount of authority representing the community. You're not going to end up with unanimity, especially with an ecosphere that is broad as this is. I would also offer up two examples of ways to do it and not do it correctly. Money service business